Hey, Michael Smith here with the Bluefield Group, and today I'm here with Caitlyn Marcell of the Marcell Group with Guild Mortgage, and today we were talking about how they've recently made some changes to how medical collections show up on your credit report. So Caitlyn, I hear that there's some recent changes that have been made which could potentially be a very positive thing for borrowers, right?
Definitely. So medical collections now have a 180-day waiting period before they hit your credit report. This also impacts the client for any previously paid medical collections or are being paid by insurance agencies. So It's going to possibly increase a lot of people's credit score.
So 180-day wait period. So that means if I have a medical collection that gets filed, right, it's going to be 180 days before that actually shows up on my credit.
Yes, so they're going to give that 180 days for insurance to really kick in and impact the score so that it doesn't hit the credit report and negatively impact your score, even though it doesn't hurt the mortgage process.
Okay, so why are they making these changes?
They want to really focus on accuracy with data on the credit report. Too many times information reports twice, or it just negatively impacts the client when we just haven't had the right waiting period. So we're trying to impact that positively.
So Caitlyn, the way I understand it is a lot of times medical collections will just show up on your credit report, right? They won't even necessarily give you the opportunity to pay the bill. Sometimes as soon as they issue the bill, they automatically stick it as a collection on your credit report, right?
Exactly. We're getting away from that. The three credit bureaus, Equifax, Experian, and TransUnion, are giving that 180-day waiting period before communicating with the insurance companies, before communicating with the collection bureaus to make sure that your information is accurate the first time for your credit score.
That's great. And so obviously a higher credit score not just only means a better interest rate, but potentially could mean whether or not you even qualify for a loan.
Exactly. Right? So a lot of people who really didn't qualify before actually have a potential of qualifying to buy a home a lot sooner than they think.
That's great news. So guys, we'd love to chat with you more about this if you have any specific questions about how this might impact your credit or your ability to qualify for a loan. So feel free to call or email us. We'll get you connected with Caitlyn, and we'll go from there. And also, we really want to make sure that we're bringing you valuable content. I really hope you enjoyed this video. If there's anything specific that you have questions about, certain topics you want us to cover, please comment below. And again, we just want to provide value and make this as educational as possible for you. So Caitlyn, thank you so much for your time.
Of course.
Appreciate you coming in, and we'll see y'all on the next one.